Please give a warm applause to the Chief Investment Officer of Danantara Indonesia, Bapak Pandu Sjahrir.
Thank you, everyone. I know I'm one of the very few last ones, so thank you for being patient with me and also being here and willing to listen to whatever I have to say the next 10, 15 minutes. I think some of you, probably the Indonesians, know quite a bit maybe about Danantara, and for some of the Indonesians, they probably know more about Danantara than me, given that many of the people here, which I call the Indonesian elites, are following very closely what's going on in Danantara. But for some of you that are here, I met some of you that are first time in Jakarta, first time coming to this event. Maybe I'll share 1 minute about Danantara, and then we can talk about the topical issue for the past few weeks. You know, one of the things that I do, at least in my job, and also my colleagues in Danantara, is going around the world as we have to invest not just here in Indonesia, but also globally to be able to invest for the benefit of our country. And one of the things that we're seeing today, this is after Davos, the meetings in Davos, one of the key observations that I see is that geopolitics is top of mind. After this talk, there will be a geopolitical talk where you probably have all the key experts talking about this. But what you're seeing today, volatility is back, volatility is real in every asset classes, and almost there's no hedge. When you see public equity go down, gold also go down, crypto also go down. Even though some of these asset classes should be uncorrelated, but what you're seeing today because of geopolitics, a lot of some of these key assets react the same way. So this is probably one observation that we've been seeing the last 4 or 5 weeks. And you know, one of the key things is that where is capital going? There's a lot of discussion, capital going from developed markets to emerging markets. You know, we would love to see that translated. But one of the things that was also discussed during Davos was also how capital reallocates to credibility and not just return. Safety or safe havens have become more of a premium today in the investment world. Now, scale without an anchor was the missing piece. I want to be upfront about all the issues that we're facing today. And one of the key things is if you look at Govy, that's the best way to look at this. As of a couple of days ago, 10-year Govy, you know, Indonesia is now being repriced. And repriced has to be relatively risky. So the market is telling us one thing. Yet at the same time, if you look at our economy, it tells us another thing. You know, we have a stable economy growing at 5% plus. You're also seeing an inflation that's relatively muted, a population that is growing and young, and you know, a government that wants to push not just for growth, but in a way equality for a lot of its citizens. So you know, there's this a bit of a convergence what's happening in the market today, as well as what's going on in the economy. So, you know, the last 5 days have been super fun if you're a trader because of the high volatility, but not super fun for someone like myself because every morning you come up with new news and a lot of, I would say, crisis management. You look at year to date, this foreign outflow with what happened at MSCI, and somehow today MSCI is top of news. Even my mother, who doesn't know what MSCI stands for, say, what's wrong with this MSCI? So I have at home my mother, my 9-year-old daughter, asking me what is MSCI and why does MSCI bring the market down and what's happening, right? So it's actually very close to home for a majority of Indonesians. We're getting a crash course of what's happening in the capital market. And this is also key because today capital market in Indonesia has grown with more than 21 million registered individuals investing in the capital market. It's a very much retail-led investment rather than institutional-led. So what this says, you know, indices signal sentiment, institution shape outcome. And this is important because today the stock market is very retail-led, individual-led, rather than institutional-led. So this is kind of the slide to show you what has happened the last 7 days. And then, this new word, demutualization, why do you want to do demutualization? A lot of discussion on this. But this is not something new. Feel free to take pictures. I'm sure this will, spread around, but this is such a key, important concept. Demutualization, in our view, it's a modern exchange model for credibility, for capital, and competitiveness. It transitioned from member-owned, not-for-profit exchange to a shareholder-owned, for-profit company. It creates governance, independent board, stronger oversight, clearer accountability. It creates market integrity with respect to clear lines of responsibility and decision rights, transparent reporting and disclosure. It unlocks capital, ability to raise funds via private placement and the likes. It also creates faster decision-making ability to pursue M&A and new business. And lastly, it brings in institutional, foreign, and strategic investors and reduced dominance. I'll repeat that again, a reduced dominance by any one stakeholder group. So this is the thesis. So then people ask, is this new? Who has done this? What's the benefit? So, we always say, our presidents say, copy with pride. Let's look what other exchanges have done. So I'm going to share some exchanges, what they've done. What it shows that international experience show clear, repeatable benefits. These are some of the exchanges that have done demutualization. It is not a new concept. The first one, Australian Stock Exchange, was actually in 1998. NSE in 1992. So a lot of this, has been done 25 years ago and even more. So this is not a secret. This is something whether you want to do it or not. And if they say, what's the case study? Has this gone well? This is very simple. You can research it. You can go to the internet. You can use whatever AI application you do. It will show this result. One thing very clear, the company become bigger, become deeper, become stronger over time once you demutualize. It's as simple as that. And this is something why we in Danantara, as a big proponent of the stock exchange, demutualizing. This has become a hot topic, at least in our country, Indonesia. I think stock market is the fastest way, especially for our foreign peers, to express confidence and to invest in our country because it's the most liquid way for you to express confidence. So for us in Danantara, the sanctity of the capital market is sacrosanct, it's the most important, and our job is to make it bigger. I didn't write it in this presentation, but the best way to look at it is based on market cap to GDP. If you look at some of the leading indices in the world, I'll exclude Hong Kong. Hong Kong is about 25 times to 1, meaning the market cap is 25 times larger than its GDP. But on average, it's 2 to 3 times the size of the GDP. Indonesia today is only 0.6 times, meaning that over time, if we do relatively well, the stock market should at least double in the next few years because it better expresses the condition of the economy. The reason there's a divergence today, because there's a clear asymmetric condition between the economy and the capital market and its governance. So this is where we are. I'm just putting more slides of success stories of demutualization across the world. And I now only got 40 seconds. I made sure that no time for Q&A. But the main purpose is this. I think for Danantara, obviously, we are a sovereign fund recently established 11 months ago. 11 months ago, for some of the audience, a lot of people see us as potentially a hindrance to this market. So the stock traded at 5,000 when we were announced. There were 3 of us, started that journey. Today, Danantara is about 400 people, $1 trillion of asset that we have to manage. And what's interesting, the stock market today is at 8,000, went from 9,000 to 8,000, and now everybody is asking Danantara to be involved in investment. So see how fast 11 months change. What matters is how do you build institution the right way, to build governance, and not just look backwards. This is also key. You have to look forward and to try to compete with the best of the best. And I think this stands with IDX too. The competition of IDX has to be all the global indices, the top ones in Asia, and see and copy with pride. Demutualization is probably the fastest way to express that, to be competitive, and we applaud the regulators, OJK, as well as the parliament in supporting this initiative. And we do hope that this will happen very soon. We're going through the regulation, etc. But we hope that this can be a second half activity that hopefully will boost this market. So that's it. Thank you. It's a thank you slide after this. Thank you for willing to listen. The most important chat is actually after me, which is about geopolitics, and all the speakers are here, world-class speakers, and they will talk about geopolitical activities and things and trend. So I'm really looking forward to all of you to be here. I'm the filler to you guys, okay? So I'm just filling in between the 2 conversations, but I want to thank everyone. Appreciate your time, and hopefully, I know you met with some of the Danantara folks. Hopefully we can address some of the key partnerships we can do together with you. And we are here to invest and to ensure your profitability investing in Indonesia. And we're happy to be a local partner of yours. Thank you so much. Assalamualaikum warahmatullahi wabarakatuh.
Thank you very much. Please give another round of applause for Bapak Pandu Sjahrir.